Hello, this is Kevin Prince from BMO Exchange Traded Funds, and I just want to say welcome back to the weekly Market Insights Show. We're so pleased that you take the time to join us each week to really get some insights on the overall market itself. You know, each week we tend to see the audience grow and grow, and it's really because you, the listeners, provide us some good quality questions that help drive the content for this event. In fact, actually, this show itself that we're going to put on today is really driven by some questions we got by some end investors. So hopefully we'll keep doing that on a go-forward basis for you. We're going to take the next 30 minutes and again focus on giving you some market insights. The focus for this week is going to be volume in ETFs, really that you cannot see. And I think you're going to open some eyes today and show you some pretty interesting stuff. Now, our guest today is the NEO Stock Exchange. That might be a new name for you, and we're going to walk you through that in a little bit. But they are another stock exchange inside Canada. And effectively, they also provide listings and trading of ETFs as well as trading of stocks. Again, we'll talk about it a little bit more. Our conversation, bear with me here, it's really kind of important to know that when you think about trading here in Canada, and we're going to talk about topics, that there are actually 12 exchanges in Canada, not just one, but 12 exchanges in Canada. I know that might be a little eye-opening for people, but we're going to talk about that a bit too. And as we get into this discussion, I just want to make it clear from the very start that with Inside Canada, you don't need to worry about execution. So I'm saying there's lots of exchanges, but don't worry about execution. So when you hit that button to buy something or sell something, be perfectly clear, there is a rule with Inside Canada called best execution, IROC 3300 to actually be more specific. And what that effectively says is regardless of the exchange, whatever the best price is, you get that. So what we're really going to talk about today more about is some of the data set that we want to highlight around it, but not make you worried about the actual transaction, because you always get best execution when it comes to ETFs. And stocks for that matter too, sorry. Let's get into it. Ultimately, a little bit of disclaimer here for you. What we're really trying to say in the disclaimer here is this is not advice, this is not recommendations. This is really to provide you insights on the overall market itself. And I'm going to introduce my guests. Our guest today, coming in from the NEO Stock Exchange, Eric Sloan. Thank you for joining us, as well as returning for us from last week, Mackenzie Box from BMO Exchange Traded Funds. Thank you both for joining us today. Really appreciate you taking the time. Now, I'm going to go to Eric in a second here, but I thought we'd kind of kick off a little bit of Eric and just say, Eric, can you maybe give us a little background about the NEO Exchange and really talk to us about alternative exchanges too, for that matter, then where you fit within inside that, where NEO fits within inside that dynamic.
Happy to, Kevin, and thank you very much for hosting us today. NEO, as you highlighted on the onset, we are a relatively new stock exchange. We just celebrated our 5-year anniversary here in Canada or this week rather. For us, we are different in a few different ways. We're owned by majority buy-side stakeholders in Canada, formed to really drive competition in the listing exchange space in particular, and really drive a different benefit for investors. So I mentioned at the beginning, owned by majority buy-side, we've got some big parents, OMERS, CI, IGM, Invesco, among others, RBC, Barclays, and Virtuous stakeholders in our business, but buy-side majority. And that means we're ultimately focused on doing what's right for long-term natural investors, capital raising companies, and asset managers first. That's our biggest focus. In 5 years, we're now about 12% of the market in trading. So if you're trading corporates or trading ETFs in Canada, odds are you've actually traded on NEO already and just didn't know it. And that's a sign of how good the technology is in Canada, where investors can transact on multiple marketplaces. Kevin, you mentioned 12 of them. NEO operates 3. 2 venues you can see, and one what's called a dark pool here in Canada. And we really pride ourselves on bringing competition, upping the service levels, and really driving new business and innovation into the Canadian capital markets. That's a bit of a primer on us. We're definitely working hard to earn our right in the listing space. We've got 75 funds listed with NEO now, and 13 public companies, and working to expand that in the remainder of 2020 and in the years ahead.
I think that's a very interesting thing. I mean, a lot of people may not know NEO for that matter, and they're probably more familiar with the TMX because of Canada and the legacy around it. But like the TMX, stocks and ETFs trade on your exchange, and not just your particular holdings, your 75 you mentioned, or the 12 stocks. You can actually actually it happens that everything that trades across your exchange, regardless, just best execution one more time. And in addition, you also do offer some listing too. So that's interesting. I mean, it just kind of highlighted that the dynamics of the overall exchange listing and how things are trading is certainly changing out there. Now, one thing I'm going to ask you, oh, sorry, there, go ahead.
No, I was just going to say 100%. It's about providing an option, and you know, folks like BMO have led the way, getting our first set of ETFs out into the street today.
Now, I always like to start these sessions off with our guests, and again, thanks for coming on the show. I always like to start this off as highlighting some of the nice tools you offer in the marketplace. And Eric, you really walked me through something I kind of was pretty darn impressed about in regards towards your best bid. So everybody out there, I'm going to quickly highlight, go to the NEO Stock Exchange website itself, and maybe Eric can walk them through what you can get on your site there for some tools, free access tools.
Yeah, certainly. I mean, one of the things that we've certainly run into over the last 5 years is that the toolkit that investors and even advisors on occasion, what's in front of you is typically delayed data. And what that means is it's usually 15 minutes delayed, and ultimately giving you a look into the market, but maybe not the most accurate as far as real-time visibility goes. So, you know, given our stakeholders in the business and our focus as a stock exchange, we said, look, we need to provide this group of investors with the most amount of information within our control that we can. And our website was the first easy way where we could do that. As Kevin mentioned, neostockexchange.com, we provide real-time streaming market data for all Canadian listed companies and ETFs. And on the screen in front of you, you see an example of ZAG, that's BMO's Aggregate Bond Index ETF. You can see the listing exchange there listed on the TSX, but this is actually NEO's representation of that security and our trading in ZAG a few days ago when we were assembling the content for the webinar. On the website, you can see top of book quotes. So you can see the best bid, the best offer on our market. You can see the volume that's traded on the NEO exchange on ZAG for that particular day. But more importantly, you can also see depth of book quotes. So you can see the top 10 price levels or other orders in a detailed quote view, as well as most recent trades. And again, the key differentiator here, real time, it's accessible from your desktop. It actually even also works in mobile mode. So if you're out on the move and want to take a look at a stock, you can pull up the website on your phone, and it looks pretty slick.
And what I like about this is we talked about the multiple exchanges. This is actually giving somebody a best bid, best ask across those multiple exchanges. Great tool. Glad you brought it to the marketplace. Look forward to using it in the future. Hey, Mackenzie, let's start off because we're going to talk about liquidity. And of course, we're going to talk about volume. And I think it's always good to level set, especially around ETFs. You know, what's the thoughts around liquidity? How does it really impact ETFs? Maybe give us some background around that.
Yeah, thanks, Kevin, and thanks everyone for joining us today. One of the most common benefits of an ETF is really the liquidity. And when you think about liquidity of an ETF, there are really three levels. So the first being the exchange, which is the natural liquidity between buyers and sellers in the marketplace. And what you often see is more established ETFs can actually have enhanced liquidity compared to their underlying holdings. And the second level is the market maker. So market makers are responsible for posting bids and ask offers on the exchange throughout the day on the underlying during trading hours. And then lastly, the third level is the unit creation. And this is really essential as the market maker can offset demand and create more units and continue to make markets throughout the day. So when you're looking though at an ETF, the key thing is really to look at the volume trading of an ETF. You know, often people think that's the key indicator, but that's really only a piece of the puzzle when you're looking at liquidity. So you really want to look at the underlying of an ETF to really understand the liquidity of the ETF. And, you know, we say, you know, ETFs are exchangeable for the underlying, and the underlying is exchangeable for the ETF because they really do move together. Thanks, Kevin.
No, it's a great point. We just want to level set for everybody because we're going to talk about volume, and a lot of people look at volume as an indication of liquidity. Can I get in? Can I get out? What we're just simply highlighting here is, especially around ETFs, as Mackenzie said, the underlying is exchanged for the ETF, and the ETFs exchange for the underlying. So there is always liquidity in there, regardless of the volume you see. But I know everyone wants to look at volume, so let's talk about volume in more detail. And I'm going to maybe think, hopefully by the end of this session, maybe you won't be looking at it as much. Let's start off with you, Eric. Let's talk about, this is last month, and you gave us a little chart on there. Talk us through about what you're showing for volume against these exchanges here, for that matter.
Brilliant. Yeah, happy to share. So what you see here is basically a full pie covering the total volume traded in ETFs and how each of those marketplaces that Kevin, you shared at the beginning, contribute volume to the overall ecosystem in May. What you can see is all ETFs in Canada, so both those listed on the TSX and also those listed on NEO. And we represented about 18% of that volume today, despite the majority of ETFs in Canada obviously being listed with the TSX. Mackenzie highlighted a key point. The market makers have choices on where they quote, and dealers will choose where they quote in the business. That ultimately means there's competition amongst us marketplaces to provide services for trading that would ultimately attract people to post volume with our exchange versus the others. You can see NASDAQ is obviously a significant contributor to ETF volume. And there's a significant world that happens outside of the TSX markets that as an investor, you don't always know is happening underneath the covers.
See, I think that's important because a lot of times when you look at volume, we're going to show them an example in space. You're specifically looking at TMX. And this chart really showing you for the month of May, if you were just looking at TMX volume, specifically against ETFs, you're really only seeing 42% of the picture. So again, I talk about volume as liquidity. It may not be the best indication. And I think we're going to take you down a little path here. It might open your eyes. Let's go down that path together there, Eric. You did a lot of homework here, and I appreciate you for doing that. And you're kind of pulling together some sites and showing about the volume on those sites. Can you walk us through that?
Yeah, one of the things that we've learned over the 5 years of assembling our business and understanding the tools that advisors and end investors use and use to screen how they invest. Ultimately, what we've discovered is that for many of the do-it-yourself investor tools, so if you're on BMO Investor Line or another independent channel, or you're using an advisory tool, oftentimes you're only seeing the listing markets quote and volume. So think about that in the context of the pie chart above. Let's say that was one specific ETF like ZAG you've got in front of you for Yahoo Finance on the left-hand side. When we pulled these snapshots out of the terminals earlier this week, what actually ended up happening with ZAG, I think, was 30 or 40% of all the volume traded was happening on the TSX on that particular day. That equated to 62,000 shares traded on the TSX. But in fact, there was a much bigger picture of volume trading liquidity that didn't make it out to Yahoo Finance. Same thing with ZEB. Ultimately, what is, I guess, becoming the truth of data for investors is that they're actually not getting the full picture when it comes to the quote and volume. But as Kevin said, don't worry, you'll always get the best execution. Your dealers have technology and have to abide by rules to make sure that they route your order to the market and get the best execution for you. What has become different, maybe the last point to layer on, for NEO-listed securities, ultimately they only trade on our exchange. So one of the things we've noticed as a differentiator for NEO-listed ETFs, and BMO's got a handful of treasuries listed, you can see it on the right-hand side of your screen. That's actually a complete picture because our securities don't trade anywhere else but on NEO.
Well, Eric, let's dive into this trading aspect a little more because I don't want to just pick on Yahoo, right? I think that what we're really going to highlight here is that you're going to see the fact that this issue of just pulling off one level of a data set has been pretty consistent out there. And here's some examples you put together. And of course, I want to highlight the people on the session too, that this is not just related towards these public websites. A lot of times the direct channels are only showing you volume from the primary market. Maybe Eric can quickly walk us through these sites too, or what you're trying to highlight here.
Yeah, exactly. So what you can see is in each of the boxes, there's a red circle around the volume traded. And what you'll notice, from the slide before and with this one is that for ZAG as an example, the volume is showing the same across all three portals and platforms. But actually, Kevin, if you flip one more slide forward, what you're going to see is probably one of my favorite free delayed websites will show, and this is from stockwatch.com, it'll show that the TSX number, your second row there, is in fact 62,500 shares traded for the day in terms of volume. But what you can see is when you look at the top row, that's ZAG consolidated, there are actually 603,000 shares that traded on that security throughout the entire trading day. And it's really kind of hitting home the point that there is a lot of other action that occurs, thinking about that pie chart again, that the terminal or Yahoo Finance website or any one of your investor favorite tools that you might otherwise use doesn't show you. So I'd encourage you all, if you're poking around, you have an ETF wholesaler or one of their national accounts folks in the room with you if you're an advisor, or if you're an end investor using a direct do-it-yourself tool, I would say always be wary of what's there and make sure that you do your homework, understand what's going on with a product, whether it's a company. The same thing happens there with them as well, or an ETF. I like Stockwatch. It's a good consolidated delayed tool where you can always just fact check and take a look around. And it's, as I said, free, 50 minutes delayed though.
Oh, I can't agree more. I think this is, and thank you for putting this slide together. It really does show the point. And wow, 10% on the TSX in this listing here, as it shows here, and really 10% relative to the overall volume traded across the board. So it does show you when you're looking at volume, just be cautious of that number because you really got to dig behind it. And again, I don't know if it's the best sign of liquidity of an ETF. I really don't. I think it's just a number. I get it for a stock. You buy a stock, I know you get in, you get out of it. But an ETF, as Mackenzie highlighted at the beginning, there's more things going on. The ETF is exchangeable for the underlying, and the underlying is exchangeable for the ETF. So really look at the underlying volume across the board. If you're looking for some websites out there that are going to give you the insight that Eric just highlighted, there are a few. He highlighted, and I think it's a good one, is that stock website. You can type a ticker in there and Canadian ticker, and you'll see a broader list of what's going on in the various exchanges and volume there. Another good website out for you, of course, is quotemedia.com. I found this site a few years ago. I was always impressed with what they have on their website and the data set they have there too. So take a look at that website. We started off the session and highlighted Neo Exchange. I'm really impressed what they've done for bringing some quality content and that best execution pricing too, which is pretty unique for out there. Bloomberg does it too. And last but not least, if you're looking for a consolidated volume aspect, you can go to BMOETFs.com for our ETFs for that matter. That'll show you end of day what the total volume is across the board. Now, if you're going to any one of these websites, Quote Media, Stockwatch for that matter, I'm going to highlight a little graphic on the side here. You're going to have to choose the :CC. That's going to give the total market. If you pick just CA, that's just going to give the TMX quote. And then if you follow down below, you're just going to get a specific exchange quote. But if you pick :CC, that'll give you the full quote as the full volume behind the scenes. Now, Mackenzie, I think we kind of highlighted that volume may not be the best indicator because it's just a data set, and it's a really challenging data set to look at these days because it's not a complete data set. At the end of the day, does it really matter? And Mackenzie, maybe tell us what one should really look at there as an indication. Can I get in? Can I get out?
Yeah, and like you had mentioned, I think people look at volume because they are worried about liquidity, but in reality, what you really should be looking at is the spread, and that really gives you a better indication of liquidity than anything else. And the spread simply being the difference between the bid and the ask can really give you a better insight on how liquid an ETF is. If it's got a narrower spread, it's going to be pretty liquid and pretty easy to buy and sell. So I think if you are worried about liquidity, I think really looking at the spread is going to give you a better indication.
Let's drive that point home even a bit further, not specifically spread, but liquidity ETF, that is. Here's a large trade that just happened. I think it was just June 26th is with the source of the data set, but I don't know the exact day of the date, 16th, there it is, just recently happened on one of our ETF, ZFL. And Mackenzie, walk us through this, because effectively what we saw at the end of the day is lots of liquidity was provided. What impact did it make in the marketplace?
Yeah, so this is a trade, a buy. So if you actually look at the chart at around 205, you see a larger size, so 4.38 million buy. And you know, if you look across, you see the price. And what's interesting is that it actually had no impact on the price of the ETF. So you know, often we hear that, you know, ETFs, people are concerned about ETFs moving the market, but in reality, you know, this didn't move the market. There was no impact on the price of the ETF, and you know, the client got a great execution on it. So, you know, I think when you're looking at this stuff, you really do have to look at spreads and, you know, be mindful that these large tickets still have no impact on the price of the ETF.
And really showing the liquidity. Can I get in? Can I get out? Here's $90 million, 4.3 million shares trading and not having an impact on the marketplace, showing that liquidity of the exchange between the two. Mackenzie, give me a little bit more on the impact of the marketplace. This is a great chart that actually MBF put together that we both discovered. Maybe you want to give us a little snapshot behind what you're really seeing in here.
Yeah, and like I said, often we hear that, you know, ETFs can move the market, and in reality, they don't. They move with the market and with their underlying. So just looking at this chart, you see equity volume and ETF volume to be pretty similar, and kind of following that similar path. And there really isn't much of a difference, which I think further demonstrates that ETFs don't move the market, they move with the market and based on their underlying.
Thanks for that, Mackenzie. And, you know, hope we've opened people's eyes towards volume and maybe not trust that across the board, and really take a look at the spreads, or take a look at the liquidity of the underlying. I also want to highlight that it's not just, you know, some of the websites out there, the direct channel sites, or the public websites you see out there. When you're looking at volume itself, specifically around technical analysis, and even technical analysis tools out there may not have all the data sets that Eric just walked through. But even if you're doing that, one of the challenges is, I know as a technical analyst, you always look for volume to confirm. You really can't look for volume to confirm when it comes to an ETF, because really, again, it's the volume of the underlying securities that really matters, not the volume of the ETF that matters. So when you're doing your charts, if you're looking at on-balance volume or money flow index or accumulation line or any one of those things to help confirm your trading behaviors, really when it comes to an ETF, that really is not going to give you the information you're looking for. Really try to think about the underlying volume across the board. So with that insight, hopefully it was really good for you and picked up something net new and showed you something of the volume you really can't see out there. We're going to spend some time now and just dive into some of the key questions that came in, and I appreciate everybody take the time who gave us some questions the last week. Let me start off with Neo here. Eric, can you bear with me? I could post up. You know, why is there not one central exchange for stocks? I think we talked about, and I would kind of maybe answer that for myself before I hand the second part off to Eric. Again, it doesn't really matter because of that best execution requirement out there. There are multiple exchanges, but for you as end users, it doesn't matter, because no matter when you hit that button, you're gonna get the best execution across the exchanges. So they almost work in simultaneous for you, except for that volume data. It's kind of a little bit all over the place. Eric, what would really attract a company maybe to list on like Neo versus the TSX? And then the second part of it, you know, talk about revenues here a little bit. Like how do you make a living in this space?
Absolutely, and a great question, by the way. I mean, ultimately, I'm going to liken this to a lot of other things that show up in our lives. We like to have competition for things. It keeps all of your service partners, you know, hungry and buying for different parts of your business as a share of wallet for an investor in this case. For a company, what would attract them to list on Neo? It's ultimately a bit the same journey we go on with our ETF asset management partners in Canada. They're looking for competition. They're looking for diversity on their supply chain, how they distribute securities out to investors. they're looking for partners, folks that are willing to work with them. You know, Kevin, we're grateful for the opportunity to present alongside you guys today, and hopefully have the opportunity to do more of that in the future and support the growth of your business. Number three, service. It's being able to be responsive and proactive, obviously, in the business wherever we can, and demonstrate that we are best of breed in our business and able to support you with yours. You know, whether that's go-to-market effort, whether that's the way that our listings regulatory team works together with the BMO GAM team or other clients. And ultimately, it's about being able to provide data, insights, intelligence, things that help you run your business where, you know, hopefully we stand up and do our parts in Canada. And to maybe answer the last question around revenue, obviously each new listing that comes onto the exchange, each new ETF, we collect a nominal amount from the ETF business, obviously, as far as listing fees go. Once they're listed, they trade, and the exchange gets paid a very small amount on each share that moves through our respective market only when trading occurs. So that's really how the ecosystem comes together. And we publish data out to all the various websites. But again, you know, NEO data for the most part is free for retail investors.
Thanks for that, Eric. And let's just stay with you for a second too. Of course, you answered about the NEO does list many ETFs, 77 you were highlighting there. Talk to us about, you know, can you access BMO ETFs? Are they available on both the TSX and the NEO exchange? And I think we're talking specifically around trading.
Yeah, happy to. So we do list a number of other ETFs on NEO from some of the largest asset managers in the country. BMO, obviously, one of our early adopter partners, and you named a few others over the course of the presentation that are listing with NEO and diversifying their ETF lineup to also include the NEO exchange in their listing decisions. And perfect, you've got a slide of some of our partners that have chosen to list or migrate to our exchange. When you think about ultimately the actual decision to list, we highlighted some of the reasons. Lastly, you know, kind of tackling the corporate piece, we're also an exchange for companies, and that's another battle we're working on now in Canada to really drive competition into the company listing decision as well.
Thanks for that.
Pleasure.
Is there a way to purchase index funds? Oh, bear with me. I can't read the screen sometimes. Is there a way to purchase index funds that represent inverse of the particular index? And then it's really talking about if the S&P is correct, would be interested to buy an index in the advance. But here's what really we're talking about here is effectively looking at inverse products out there. Yes, there is inverse ETFs in the overall marketplace, but the effective goal when you're looking to go inverse is you're looking to say to benefit on the downside of the marketplace. I get it. And I want to highlight there's just more choices out there. So first and foremost, we had TMX on before, and we talked about puts, right? So you can certainly look at using puts, so derivatives to access the marketplace. You can also look at, when you're through your own account, you can look at shorting the security, right? So if you want to short, that's another way of participating in the down movement of a security. And of course, there is also inverse ETFs out there. One note of caution around inverse ETFs, you have to understand that they are path dependent. It sounds fancy, but effectively the volatility of the underlying, and the greater the volatility over that period of time which you hold it, and the longer period of time you hold it, there could be great dispersion between what you expect to get and what you actually get. So think about that when you look at inverse ETFs, because they are path dependent out there. But you can use puts, and of course you can also use shorting to get that exposure to the downside too. Mackenzie, maybe talk to us a little about, you know, an investor here is looking at iShares Global Clean Energy, which is in the States, and they want to access similar ETFs like that here in Canada. A little bit advocating for us to look at it. And we just launched some recently, but maybe you can help us show us, first of all, what do we offer, and then B, where can people go?
Yeah, sure, and thanks, Kevin. So we don't have, BMO ETFs does not have a clean energy ETF per se, but we do have a broad suite of ESG solutions that we launched earlier in 2020, ranging from equities to fixed income, and then some specialty solutions as well. But if you are looking for a particular ETF, with an ESG kind of overlay or ESG focused ETF, you can go to the RIA website, which is linked here on the slide, and you can filter through that for all products. And especially if you're looking for clean energy, you can filter by that and find a product that best suits your needs.
Perfect. Thanks for that, Mackenzie. I'm going to stay with you for the last question, a little more market related. Earlier this week, we heard about the downgrade in Canadian fixed income, specifically the value, the quality of the Government of Canada's bonds. What's the impact on a Canadian fixed income ETFs for that?
Yeah, thanks, Kevin. I think right now, this is really a non-event. When we saw this happen in the States, when they were downgraded, we actually saw, an influx into treasuries as a flight to safety trade. And the one thing to remember too is that, this is only one rating system. And another thing to note too is, we're one of the G7 nations that still maintains one of the highest credit ratings. So I think, looking at this holistically, is this going to have a great impact on fixed income ETFs in Canada? No, not right now. If things continue and, we see, increased stimulus and, maybe second waves of COVID and other things that could happen, I think that's maybe a different conversation, but, just having Fitch downgrade recently, I don't think this is going to have a big impact on the market at all.
Perfect. Well, thanks for that. I'm going to thank you too, Eric, for joining us for this session, and Mackenzie for your insights. Ultimately, we're going to be back, not next week. We're going to take a break. It's Canada Day on Wednesday, and I know next week, Friday, people are going to be off enjoying some nice warm weather. So we're going to take that week off. But we're going to be back here on July 10th, again at 1 o'clock. I'm going to quickly highlight, we're going to bring in FTSE Russell. We're going to have a series with FTSE Russell. We're going to start our series off with FTSE Russell in regards towards sector-based ETFs. We're talking about consumer staples and consumer discretionary. They offer some indexes on that. In addition, after that, we're going to showcase off fixed income ETFs. Certainly some area you want to spend a little bit of time in, and we're going to do that too with FTSE. So we look forward to having us join us next time on July 10th at 1 o'clock. Thank you for participating, and please send in your questions again, because as you see today, it really does help us build content that is directly aimed for you, the investor. Cheers. Have a good weekend.